We've made it, folks. Arizona is officially in the top 10 least affordable states for homebuyers. Congratulations. According to this article by the Phoenix Business Journal, there was a study that was done saying that U.S. home price reached $408,428 last year, while the national income per capita stood at $68,786 as of the third quarter. This equates to the median house costing about 6 times more than the average salary nationwide. And Arizona ranks number 9 on this list of least affordable states to buy a home. The numbers for Arizona, the median home value was $428,492, or 6.9 times the income per capita of $62,091, according to the study. Now, of course, Arizona is a very big place, but let's be honest, the Phoenix metro area encompasses a pretty large section of homes that are being purchased and sold here in Arizona. So not the best news for affordability, but also not surprising. It's been a hot topic for the last few years. So what's next? Everyone expected home prices to start to come down. Many said there would be a real estate crash, or at least just softening in home prices, but we haven't really seen much of that. So what's going to happen next? Well, if you've seen any of the news, Biden has proposed a home buyer tax credit. There's 2 tax credits that are proposed: a first-time home buyer tax credit of $10,000 and then a 1-year tax credit of up to $10,000 to current homeowners who sell their starter homes. So the way that this would work is first-time home buyers would qualify for an annual tax credit of $5,000 per year for 2 years, and then a 1-year tax credit for homeowners who would sell their starter homes. They have to sell it to an owner occupant, and it is considered a starter home if it's below the median home price in their county. Both of these tax credits are geared towards middle class families, those that make less than $200,000 a year. So, is this going to help? Well, I think it could be helpful for some folks who wouldn't get into a home otherwise. So, it may help affordability in that way, but affordability is kind of twofold right now, right? It's home prices and it's also those mortgage interest rates, because that's what's making the payments so high in combination with prices. So, a lot of this will depend on what happens in the broader economy as well, and mortgage rates playing a really big role in that. So let's talk about rates and what's going on here. Last week, mortgage rates ended in a good spot. They had hit their best levels in more than a month by the end of last week after moving lower for 4 straight days. It sounds like Friday there wasn't much big news, so that's great. But we have to watch out for what's going to happen with the CPI. And when you guys are watching this right now, you probably already know the news. I'm recording this on Monday, but CPI comes out on Tuesday. And according to Mortgage News Daily, if it comes in much higher or lower than expected, rates will likely react in a major way. So if you're a home buyer out there, make sure you're keeping this in mind and maybe checking in with your lender, because the rate that you've been quoted may change drastically depending on what happens with the CPI. So talking about affordability, that's one thing, but we also know that rates hit 5.99% last year and our contracts increased by 13% in 1 week. So what I'm saying is when rates go down to a certain level, there's definitely a threshold there that brings out all of this buyer activity and buyer demand. And so whether or not 5.99% is that number still, I know that if we do have rates start to go down, we'll likely see all of this demand coming back. And is affordability going to be affected if we have demand coming back and supply doesn't increase? No, we're just going to have another problem of too many buyers chasing after too few homes, which then increases the prices. We'll see what happens with rates. From some of the lenders that I've been speaking with, they are anticipating that the Fed is going to start talking about quantitative easing at this month's meeting, mainly because they need to provide more banking liquidity. And if that's the case, then we'll likely start to see mortgage rates come down. So we have a few few more weeks until we find out what the Fed wants to start talking about at the March meeting, if quantitative easing is a discussion, and whether or not we can anticipate rates starting to come down later this year. So let's jump into talking about what's going on in Phoenix and look at the Cromford Market Index. By the way, if this is your first time here, make sure to subscribe if it's helpful or share it with someone who would find it valuable. So we've got the CMI, and any number between 90 to 110 is considered a balanced market, and we're just barely above that at 115.9. This is not a very big change from last week, but we have gone down a little bit, and we actually have supply increasing a little bit faster than demand at this point, but ever so slightly. Our demand is about 21% below normal. Our supply is about 32% below normal. And the two of these numbers coming closer together is putting this overall index lower, which puts us into more of a balanced market. So overall, we're in this just very, very slight seller's market. But then, of course, if we look at every city and their respective CMI, we are seeing something quite different, like Chandler at 206. That is a stronger seller's market. And then we see that Mesa had a really big change month over month by 20%, moving in a direction favorable for sellers. But what you'll notice here is we have the most red arrows we've seen on this chart since December 21st. So we've got 8 cities that show an increase in the Cromford Market Index and 9 that have shown a decline in the Cromford Market Index. The overall change month over month was about 0.8%. And last week we were saying 1.6%. So again, we're still seeing this movement away from a seller's market overall, although we do have some cities that are pretty strong in the seller's market that are here at the top. All the cities in a seller's market are sitting here from Peoria up to Chandler, and then we've got a balanced market in Cave Creek, Paradise Valley, Surprise, and Queen Creek, and Goodyear, Maricopa, and Buckeye all in buyer's markets technically. We saw some pretty big changes with Goodyear month over month with a 14% decrease and movement towards a buyer's market. So if you're a buyer in that area, keep that in mind. You might have more of an advantage in Goodyear than you would have a month ago. And if you're a seller, the opposite is true. So keep an eye on rates this week if you're a buyer, because we may see some movement, whether it's good or bad. Sellers, depending on where you're at in the valley, you may have more of an advantage than others. But if you want to see an instant home valuation, check the description below because I have a link where you can do that. And buyers, don't forget to check out this video right here to learn about the questions you should be asking your buyer's agent before you hire them.